Active Investor here, bringing you another independent analysis. This time we're taking a look at Neothetics Incorporated. Each of these candle frames is going to represent a 1 hour time frame of trading, and we have about 2 weeks of trading here on this chart. So most of our price action actually happened on the last day and the day before that, but most of it on the last day, which was Friday. So we got our weekend here, and our next trading day is going to be Monday. So it could be a very interesting Monday for Neothetics. Let's just kind of go through the chart right from the beginning. So we didn't have much action here. Wasn't much action going on here until we got to this third day from the beginning of the chart, and we actually had a run-up of about 20% here. Very nice run-up. And after that, though, it just kind of channeled, and then it ended up breaking my pivot point and channeling for another 2 days before we had the last 2 days here where we had a lot of really good price action. So real quick, if you're not familiar with my videos, these blue lines are my pivot points. These are areas that once acted as support and then became resistance, or vice versa. So it really helps us determine good price action. So let me also say that this play on Neothetics has a high level of risk, and I normally would not ever even consider entering a trade with a level of risk like this. Why it's such a risky trade is because Neothetics is running on no news right now. It's just kind of getting pumped up, but it's not exactly a pump and dump, because a pump and dump chart will have let's just take a look at this Friday area here. The pump and dump chart will have a real big green candle, or maybe even two really big green candles, and then a ton of red candles, and it'll probably lose all its gains and then some. That didn't quite happen with Neothetics. We had these great green candles, but then we had some red candles towards the end of the day. But by all means, we did not lose our gains by any means, I should say. We did, open at about 75 cents. And the high of the day was about $1.20, but we still closed at about $1. So still well above the 75 cent area that we opened. So it didn't lose all its gains by any means. It just kind of dipped a little bit lower from that high. So it wasn't a pump and dump. It wasn't a pump and dump. But not only is the pump dangerous on the stock, but the volume is also pretty low, and there's no news. So it's a risky play. The only reason why I'm considering this play is because we have so much great historical data. I have all these pivot points to really help me find price targets on this and where we could get a good entrance. And you guys can't see it on this chart, but this is why I'm excited for this play. If we can break $1.15 and there's not a lot of profit takers after that, we can have smooth sailing all the way up to about $1.70 or even $1.73. So there's a huge amount of upside on this play. I would be looking ideally to get in around $1 because we have our support levels at about $1. The next major pivot point being around 85 cents, but we have the Kaijin at about 95 cents, and we have our Tenkin line, which actually just broke up from there. So we should have definitely hard support around $1 area, and if $1 breaks, we'll have more support at about 95 cents and then 85 cents. So depending on how much this thing dips, if it does dip, I would look for either an entrance at $1 or about 95 cents or 85 cents if it dips really hard. However, if it does dip to about 85 cents, that would definitely require a lot of selling off, and it might not spike up again. So just keep that in mind. The most ideal situation would be this opens up and dips to about $1 or 95 cents, and you get in there with a real tight stop. It pushes up and eventually makes its way to $1.15 through the day. Pushes up through there, and then it just kind of literally runs all the way to $1.70. That's going to be the most ideal situation for this play. So that will limit your risk getting in near the support area, because you could place a real tight stop and not worry about getting stopped out on a dip that would otherwise get you stopped out too early, because if it does end up dipping below support, chances are it could tank since there's no news and low volume. So that's what I'm going to do. I'm going to try to look for a dip to support, get in with a real tight stop, and hopefully work our way up to $1.15, break that, and have smooth sailing to $1.70, as long as people don't take too much profits. So to kind of wrap this video up, let's take a look at our indicators. Some other levels of risk is on the relative strength index. Unfortunately, we are not in our power zone over the 80 line. We're actually in what I call no man's land, which is where I never want to see the RSI, which is between 20 and 80. So we need the RSI to do one of two things. It can either immediately start lagging back up to break 80, or it'll keep lagging down, but we need it to bounce off the 20 line and then push up and break the 80 line. So either immediately hit 80 or bounce off 20 and then hit 80. But if it does break the 20 line, we're going to be in very bearish territory. And if that does happen, our MACD is also going to look really ugly, and this whole chart might just start tanking. So that's why we're going to have that tight stop in place. So if that does happen, we're not going to lose more than even like 2% or so on this trade. So you're risking about, between 2 to 5% depending on your level of risk and how tight you place that stop. And your level of profit is about from about $1 to about $1.70. So you're looking at a potential 60 to 70% return, risking only about 2 to 5%. So it's a lot of upside for not so much downside, and that's why I'm really considering this play on Monday. Lastly, let's take a look at the MACD. So our MACD is in a bearish cross right now. I'm just curious to see where that bearish cross started. So actually, it ended up starting towards the end of the day. But since the after hours action started pushing up again, you can see our MACD was legging up, and actually it's just about to cross bullish again here. And if that does cross bullish, then we're probably going to see that first situation I was telling you about on the RSI, and it'll probably immediately start legging up to the 80 line. So keep an eye out Monday for the pre-market action. If it pushes up pre-market too much, it might be overextended. But since we have room to run all the way to $1.70, past $1.15, if it breaks that, then it might not be overextended too much. You really got to look for that tight stop, since this is a risky play with a lot of upside, and really just make the best decision that will also reflect your trading style. So that's what I'm going to be looking at, guys. Keep an eye out for NEOT on Monday. It might, just wear off and start dropping down, but in that case, you wouldn't even enter anyway. So just look for a little dip, about $1. Don't risk too much on this trade. Put a real tight stop, and if things go right, you have a ton of profit potential on this. So be really careful with this play, guys. Just to reiterate that again, be real careful, please. But if things go well, this play can get you a lot of money on its return. So hope you guys do well on this. I'm going to be keeping an eye out, and I will catch you around. If you like this video or have any questions, please leave some comments. And give it a thumbs up or so, and subscribe for more videos like this. If you enjoyed this, I'm sure you'll enjoy what I got coming in the future, and I'll catch you around.